Hello and welcome to Session 23 of the Basic Tax course. We're going to begin Session 23 with a review of the Session 20 quiz. And the first most frequently missed question on the Session 2021 quiz is question number 2. A self-employed individual may elect to use the non-farm optional method for calculating self-employment tax not more than 5 taxable years in his or her lifetime. That is a true statement, and really we didn't spend much time talking about the optional method, so I'm going to pull you over to the answer key here. And on the answer key for question number 2, it says, to use the optional method, you must meet the following tests. You have to have net profits from your business that are less than $48.51. Net profits were less than 72.189% of gross income before expenses. Net earnings from self-employment were at least $400 in at least 2 of the last 3 years, and you cannot use the optional method for calculating SE tax more than 5 times in your lifetime. Essentially, the purpose of the optional method is to allow an individual to create a net profit from self-employment purposes for generating self-employment tax, but also to generate some specific benefits such as the Earned Income Credit and the Refundable Child Tax Credit. Things like that can be generated as a result of making an election to pay self-employment tax under the optional method, but there is a limit on the number of times in your lifetime you can do that. The next question we're looking at is question number 7. A church minister must pay self-employment tax on which of the following sources of income? Now, our course on self-employment, or the 2 sessions we had on self-employment, covered a lot of stuff, but it didn't really get into ministers. However, if you're looking at the Schedule SE, the long version of the Schedule SE, there is place on there to enter church minister income. And you never know as a tax practitioner when a minister is just going to plunk themselves across from you, opposite you, and want to get their taxes done. And you need to know that the minister's income is subject to self-employment tax. So how much income of a minister is subject to self-employment tax? Well, pretty much all of their income from work for the church is, including rental value of his or her home that has been provided rent-free by the church, housing allowance provided by the church, and wedding and funeral fees that they receive for their work as a minister. Now here in the answer key, I did want to read to you what we've put in here. If you are a minister of a church, your earnings, including housing allowance for the services you perform in your capacity as a minister, are subject to self-employment tax. These earnings are subject to self-employment tax whether you are an employee of your church or a self-employed person under common law rules. Qualified services in general are the services you perform in the exercise of your ministry or in the exercise of your duties as required by your religious order. Income you receive for performing qualified services is subject to SE tax unless you have an exemption. Well, the exemption is a specific written exemption form that must be submitted to the IRS, and on it, a minister who applies for that exemption is essentially saying that on religious grounds, their religious beliefs prevent them from participating in the Social Security system or the Medicare system, and they refuse to contribute to it, and at retirement, they won't be entitled to receive anything from it either. So many ministers will come in and say, yeah, I've heard that we can be exempt from that SE tax. Well, that's true if they, on religious grounds, are willing to forfeit all entitlement to receipt of any Social Security benefits. Most ministers, once they find out that not paying into the system means they're not entitled to receive from the system, change their minds and decide, I think I'll pay into the system. The next question we're looking at is question number 8. Jake is self-employed and single. He pays all of the support of his 8-year-old daughter, Jackie. Jake had no employees during the year and has the following income and expenses to report for the year. Gross receipts from self-employment, $30,000, and he has the following expenses: advertising, supplies, depreciation, medical insurance, and child care. And the question reads, what is Jake's net income from self-employment? Well, what you need to do is, of course, establish what is an allowable expense and what is not. And in the answer key here, I have certainly told you what is allowable. Advertising, supplies, and depreciation are allowable, but the medical insurance premiums, that is not an allowable expense when paid for the owner of a business on Schedule C. So in the wording of the problem, we tell you that Jake has no employees, and therefore we know that the medical insurance premiums he must have paid would be, well, for himself and his family. And without any employees, he couldn't possibly be claiming an employee benefit deduction on his Schedule C, and he certainly cannot claim a deduction on Schedule C for the cost of medical insurance premiums he pays for himself and his family. So that means that if that deduction is allowed, it would be allowed as an above-the-line deduction on his Form 1040, basically as an adjustment to income. But under no circumstances should the medical insurance premiums that he pays for himself or his family go on Schedule C. And then child care. Child care also is not an expense that is deductible on Schedule C. In certain situations, child care may be a deduction for a business if the business is paying the child care for its employees. But if you are self-employed and you're paying child care for your own children, definitely not allowed on Schedule C. If you're allowed to benefit at all, it is as a child and dependent care credit, and you would need to